What's up, guys? Chimp here, and I want to record a bit of a market update here. Not much has really changed since I recorded the last one, to be honest. We were at 93, 94, something along those lines a couple days ago, and we basically sat here for the last 2 days. And there's something that despite price sort of staying the same, there's always information you can gain from how the market is trading. And so the question here is like, hey, is there anything of interest here? Like, can we observe something about how Bitcoin is trading, or how everything sort of in tandem is trading, to give us an idea of where the price might go? And so that's sort of the question we have to ask ourselves today. So I talked about it in the last video, and by the way, I talked a lot about like gold and TradFi in the past. Maybe I'll cover that at the end. Maybe I won't. Just let's see how this goes. I'll just make a brief comment about it now. Gold went from 2,000 to 3,500, and it had to pull back from 3,500 to 3,300. Again, I don't know how to predict how gold trades, so to me that's just noise. And if you look at the Nasdaq, it went to 16,500, it bounced back to 19,000, it went to 17,500, now it's back to 19,000. Who knows how all this stuff trades, right? There's a lot of factors and flows that go into these markets that make it very difficult for a layperson to make a determination about, right? So I don't have that expertise. I don't know how to get all the buyback data from Google, combine that with data from, like, I've heard crazy, like, this is just anecdotal, but it's like, you'll have firms that literally have cameras outside of like major businesses to track how many people are going in and out, to make determinations about how that business is going. Like, I don't have access to all the passive flows that go through Fidelity and everything else. So these are all variables that I don't have access to. So for me to sit here and try to make a prediction about, hey, what's the Nasdaq going to do in 3 weeks, or what's gold going to do in 3 weeks, is fruitless. So maybe that's all I'll say about this video, and maybe I'll keep it more towards just Bitcoin in terms of what I want to talk about. So let's just sort of recap what has happened in the last 2 months or so. We dumped sub 90K. We had multiple drives at sub 80, and we auto bounced every time. So to me, like, what is a good sign that the market's deleveraged? It's when you try to like attack a low multiple times, and it just, like, you might take out the low, but it just auto bounces. It just auto bounces. Like, every time it just auto bounces. A good example of that, again, is like summer of last year, right? Like, let's just use 55 as the level. Every time we'd go sub 55, the market would basically just auto bounce. Like, first time it was to 56, auto bounce. Then we go to like 53, pretty much an auto bounce. Go to 49, auto bounce. And then the final one was like, we dumped below 55, we just basically like grind up, and then we auto bounce right back up. So to me, when you see like patterns like that, it tells you that someone's trying to force. It's like that analogy, right? It's like you push a ball underwater, and then that ball pops right back up. And sometimes you might be able to push it a meter underwater. Sometimes you might be able to push it 5 meters underwater, but eventually it's going to pop back up to the surface. So to me, like, that's sort of what we saw sub 80. Like, you had the ball get pushed underwater a couple times, test the market to see if there's any liquidations to take out, and nothing happened, and so the market ended up popping, ultimately coming back above 80. And we had basically sat below, like, whatever you want to call this, resistance, for so long that you had people start shorting, you had open interest start to go up, and I'll show you the open interest charts here. Like, open interest started going up, and then like actually a lot of the open interest ended up popping and coming out. So that's sort of where we're at right now. And the question is, okay, we're at 93.7. What's next? Are we going back to 80, or are we going to 100, or maybe are we chopping here for a while? So what is my current base case, and what are some signs that I might look for to determine like something major has shifted? So my current base case is the following. We had like, you could take it for longer, but let's just say for 2 months you had like mega price suppression. And you basically ended up having like seller exhaustion. You had people on derivatives trying to short the market ultimately, and you had, and I think I talked about this. Not sure where I talked about this. Maybe it was in a video. Maybe it was in one of my old, like earlier videos. But like when you think about it, if someone was like a fund and they got wrecked, giving them 2 months, like that's more than enough time for them to sell. So you had this situation where you had people who might have gotten wrecked. They've had plenty of time to sell. There's not that much spot supply sitting around trying to sell. You've had ETFs that have been able to deleverage, etc. So to me, like we're sort of sitting at 93, and one, you have ran out of a lot of the spot supply that wanted to initially sell, right? Like, uh, basically, the question, like, alternatively, the question you want to ask yourself is like, hey, is there someone at 93K, or is there enough entities at 93K that want to sell Bitcoin that didn't sell it at 85? And I think like when you think about it in that sense, the answer is no. And the reason the answer is no is like if you had a mandate to sell, or if you had a reason to sell, like you're closing your fund or whatever, like you're gonna sell it regardless at 85. Like to me, no one's gonna sit there thinking, I really need to sell all my Bitcoin, or very few people are gonna sit there and say, hey, I need to sell all of my Bitcoin. I need to sell it relatively quickly, but I'm gonna wait for a 10% pump before I dust everything. Typically, that doesn't happen. And I want to show you this example, like this breakaway suppression pattern and then price going up, and sort of using that notion of like, hey, I've had months to sell, but I didn't sell. And I want to go back to like 2021. And, Bitcoin came off this high of 65. We ended up going to basically sub 40, and we ranged from like 30 to 40. And you had like exact same thing, 2 months of this price suppression where price starts going down. It's just grinding lower. Like people who are gonna sell are gonna sell, and then ultimately, like in this case, you had a lot more shorting going on. You sort of end up grinding and you pop, and then you end up chopping for a while, and then you end up going back higher. And it's the same thing that happened there. Like anyone who wanted to liquidate or sell their crypto, like they were probably going to sell it at 30. Like they probably all sold it at 33 or 35 or 37 or 31. And so when Bitcoin went to like 40, you had some chop, you had some like marginal sellers that came in. But for the most part, like what you had was like a lack of sellers and then a reinvigoration of bulls, which ended up ultimately leading to higher prices. And I think to a large extent, we're going to see, like my base case again is that that's what we're going to see. Like we might see some chop here. It might be longer than what people think, right? We could chop here for like, I don't know, weeks, right? Like 3 weeks, 4 weeks, whatever. Like it could be some sort of chop. We could spike up, we could spike a bit down. But I think ultimately we're going to end up grinding higher. And so like this is sort of my base case. This again, it's probably not going to be like a straight line like this. It could be like a lot more choppy. But that's ultimately my base case. And so also let's look at some data points, with price trading at these levels. I want to show you guys two things here, and then I kind of want to talk about like what might invalidate this thesis. First thing, ETF flows. A lot of people made like a lot of noise about, hey, the ETFs are like mass exiting in February. Look, the last 4 days, the ETFs have put in over $2.5 billion. And what was a bunch of outflows, like the peak was 40.5, the bottom was 35.5. We're already back to 38.2. So like half of those outflows have already basically retraced. And my base case for the ETF, like I mentioned, was like in the last video, maybe it was a video before, I don't remember, but you're going to get a lot of inflows. You'll get some percentage of those that come back out as outflows if something happens. And then ultimately, like this chart's just going to keep going up. And by the way, this is the same story, maybe to an even more extreme when you look at ETFs like SPY, where everyone's just passively putting money in. Like most people, in my guess is most people who are buying these ETFs are like buy and hold. They're not like panicking over a 10% move or 15% move or whatever. That's probably like actually holders on the margin rather than like the majority of holders. So ETFs are inflowing again. The inflows could stop. They could be slow. Maybe it's at a more measured pace than it was late last year. Sort of like if you look at April to like September of last year, we had like 5 billion in inflows, but it took a couple months, right? Very possible maybe we're at 45 billion in 3 months. I don't know. But again, like when you're thinking about like reasons to be bullish or bearish Bitcoin, like this should be one of your top reasons to be bullish, which is money just keeps coming in. Doesn't matter. Money just keeps coming in. And like what's the one scenario where money might not come in? It's a scenario that like basically is almost mathematically impossible. It's like a scenario where you have mass austerity, you have like economic collapse and the government's okay with it, and like the US government's focused on paying off its debts, and like the dollar strengthens. Like it's such a perfect, for the lack of a better word, it's like such a perfect storm you're asking for, and it's just not realistic. So to me, like when I think about macro and everything else, and by no means am I an expert, uh, the data to me sort of points towards more, just this trend of flows going up continuing. The second data point I want to show you guys is Binance. And so two things here. One is Bitcoin is, has been trading above 90K, and you're getting like multiple negative funding prints. So like to me, this is telling you it's less so that people are shorting. Like I think you're getting shorting on the margins, and I'll show you guys that in 1 second. But I think it's more so just like you have spot demand, you have spot that wants Bitcoin, and you have like derivatives that are just like lagging behind that in some sense, right? So to me, like this is a very bullish sign. The fact that you're getting like negative funding rates even after a pump should tell you that like leverage demand is probably not very high here. And I'll show you guys like more reasoning for that, which is, you could pay attention to the open interest since we pumped here. And let me just delete the drawings and show you guys. And, on the first sign of like the market even dumping a little bit, you have a bunch of long open interests basically like close out. And since then, like open interest has been pretty flat. And if anything, like actually open interest has, like you have like 1,000 BTC in shorts that closed on the way back up. So like, if anything, to me, this tells me like, hey, you might have like people on the margins sort of trying to short this. Basically, like there's two stories this is telling me. One is you might have had some margin longs in the system from like lower that basically just decided, screw it, I'm out at 93, like on the dump from 95 to 92. So like there's even less leverage in the form of longs. But two, like the market sits for a bit and you have like shorts piling in, and now they're sort of like, getting back out finally, like the moment the market starts pumping. So to me, this is like this is a sign the market's not very leveraged. So I guess going from here to what I'd want to see to like be more bearish, like there's two things I'd want to see. One, I'd like to see this open interest number sort of creep up. Let me see if I can actually pull in like Bybit open interest, because Bybit's typically a bit more retail-y. Oh wow, this is pretty interesting. Let's see if I can port this in OBS to see if it's visible. Okay, cool. Like honestly, Bybit shows like what was going on to an even greater extent. Like you had price marching up, right? You had open interest marching up, and then you had like 5,000 BTC in shorts just get freaking wiped out. Like this to me tells me like retail was in the mindset of shorting. And typically when retail is in the mindset of, hey, I'm going to short, you're very early in the cycle. So again, what would I want to see? Like I'd want to see prices stay elevated, and over time open interest just start to creep back up. That would be one sign that would make me cautious. But I'd want to see that in combination with like, let's say like, again, Farcoin's not a great example because I think it's more the exception than the norm. But you'd want to see like a broad-based rally in some of these altcoins where it's like there's so much breadth that it's not sustainable the entire market to hold them up. So what's an example of that? Like, let's say, maybe TIA is not the best example, but anyways, let's just use TIA. Like, let's say TIA pumps to $5, right? That would be like, hey, but it's not just a TIA. Like, pick a basket of 10 alts or 20 alts. If they all end up pumping across the board, and you see like price sitting at 94, 95, people leveraging up, like weeks of this sort of behavior, like I'd be like, okay, there's like way too much speculation going on. Risks are much more two ways, if anything, leaning to the downside, and I'd want to sort of like back off. But I'm not seeing any of that. Like we've been here for 2 days. We're getting a little bit of speculative behavior around the edges, but like we're not really getting um, much, if any, speculative behavior um, as a whole. And so my base case, again, like what is my base case for the market? Is chop, chop or grind up, barring like weeks of confidence returning and leverage building up. So, right now we're sitting like 20,000, like maybe less than 20, like $16,000 off of all-time highs. I think those all-time highs are on the table. Maybe it's like last summer where it takes a couple tries at them to finally break through. Maybe it's not. But, one thing I would be surprised with, I guess I would say, is barring some sort of massive like re-leveraging of the market, us getting anywhere close to 76. Maybe you're lucky and you get 89. Maybe you're lucky you get 91 in terms of a dip. I'd be very surprised if you get like 82 or 76 or 79 or whatever. So, yeah, I mean, that's the way I'm thinking about the market right now. Obviously, you're going to have to evaluate day by day and take in all the information you can. But I see no reasons to be bearish. One of the mistakes you don't want to make is like after coming out of a depressive period, in this case, like a multi-month depressive period, you don't want to flip and be like, okay, the first thing I'm going to do is now like flip and be bearish or flip and sell everything. Like actually, like more often than not, when that happens, like you actually end up getting more continuation. So anyways, guys, it's been a long video. I don't want to like drag this on for an hour. If you enjoy it, like, subscribe, and please, if you have any questions or you just want me to address anything in future videos, leave a comment. Happy to do so. And as long as people keep enjoying it, I'm going to keep doing these. To be honest, I'm recording these like when I have spare time. And some days I just don't have spare time, and some days I do. So doing it more for fun. But yeah, if you guys enjoy it, let me know. And until next time, take care, guys.